Imagine arriving in the United States for the first time. You step off the plane with your suitcase in one hand and your dreams in the other. You're hopeful, you're motivated, you're ready to work harder than ever before. You believe this country will reward your effort, and it can. But here's what many new immigrants don't realize.
In America, hard work alone is not enough. There is a financial system operating quietly in the background. A system built on credit history, on documentation, on tax records, on financial behavior. If you don't understand how it works, you can lose thousands of dollars in your first year without even realizing how it happened. Not because you are lazy, not because you are irresponsible, but because no one explained the rules clearly. Today, I'm going to walk you through the 5 financial mistakes that quietly damage new immigrants in the United States and how to avoid every single one of them. If you understand these early, you put yourself years ahead of most people. The first mistake is waiting too long to build credit. In many countries, your financial life is based on income and cash flow. In the United States, your financial life is based on trust, and that trust is measured by your credit score. Your credit score affects whether you get approved for an apartment, the interest rate on your car loan, your ability to qualify for certain jobs, even how much you pay for insurance. Yet many immigrants focus only on earning money at first. They think, I'll build credit later. But here's the problem. Credit history is built with time. If you wait 1 year to start, you lose 1 full year of progress. Even if you earn good money without credit history, lenders see you as risky. The solution is simple. Start immediately. Open a secured credit card if necessary. Use less than 30% of your limit. Pay it on time every single month. Do not miss a payment. Time and consistency are what build your score. Think of credit as your financial reputation, and reputation takes time to grow. The second mistake is confusing your credit limit with your income. You finally get approved for your first credit card. It might say $2,000, and it feels powerful. But that number is not extra income. It is borrowed money. If you use too much of your available credit, especially above 30%, your credit score can drop, even if you pay it off later. The system rewards low utilization and consistent payments. It punishes high usage and risky behavior. Some new immigrants rely heavily on credit during their first year because expenses feel overwhelming. Rent deposits, furniture, transportation, unexpected fees. But if you lean too heavily on credit without a plan, you create pressure that grows over time. Credit should be a tool, not a survival strategy. Keep balances low, track your spending, and always treat credit with discipline. The third mistake is underestimating taxes. In some countries, taxes are automatically deducted and rarely discussed. In the United States, taxes are serious and detailed. If you work a full-time job, taxes are usually withheld. But if you do side work, freelance projects, gig economy jobs, or receive independent contractor payments, you may be responsible for reporting and paying taxes yourself. Some immigrants ignore this in their first year. They assume small side income does not matter. But failing to file correctly can lead to penalties, interest, and stressful letters later. The IRS does not forget. Even if your income is small, file properly. Keep documentation. If you are unsure, use reputable tax software or consult a licensed professional. Filing taxes correctly does more than avoid penalties. It builds a clean financial record. That record can help you later when applying for loans or immigration benefits. Taxes are not something to fear, but they are something to respect. The fourth mistake is losing money through hidden transfer costs. Many immigrants send money home to support family. That is honorable and responsible. But small differences in exchange rates and transfer fees can quietly cost you hundreds of dollars per year. Some services advertise low fees but hide profit inside the exchange rate. Others charge flat fees that seem small but add up over time. Before sending money internationally, compare platforms carefully. Look at the exchange rate offered, the total fees charged, the final amount received. Even a 1% difference can mean significant money over 12 months. Your income in the United States represents time, effort, and sacrifice. Protect it. Be strategic. Never rush financial transfers without reviewing the numbers.
The fifth mistake is upgrading lifestyle too quickly. When you begin earning in dollars, it feels empowering. Maybe you earn more than you did back home. Maybe you finally feel independent. But the cost of living in the United States is high. Rent is expensive. Insurance is expensive. Healthcare can be extremely expensive. Some immigrants upgrade apartments, finance vehicles, or purchase expensive items before building financial stability.
Thank you.
Your first year should not focus on appearance. It should focus on foundation. Build an emergency fund. Aim for at least 3 months of basic expenses. Create stability before increasing lifestyle costs. There is nothing wrong with enjoying your income, but security must come first.
Unexpected expenses are not a possibility. They are a certainty. Car repairs, medical bills, job changes. Without savings, you rely on high-interest debt, and high-interest debt grows quickly.
There we go.
Even saving $50 per week creates momentum. Over time, that becomes protection. Protection creates confidence, and confidence allows you to make smarter decisions.
Here is the truth. The American financial system is not designed to destroy immigrants. It is designed to reward discipline and knowledge. When you understand how credit works, when you respect taxes, when you control spending, when you save consistently, you move ahead faster than many people who never learned these lessons. Your first financial year in the United States is critical. The habits you build now will follow you for years. Avoid these 5 mistakes. Be patient, be disciplined, and treat financial knowledge as an investment in yourself. If you're serious about building stability and long-term success in America, stay connected to this channel, because here, knowledge is not optional. It is power.